Good morning, everyone, and welcome to the Morning Edge. As we discussed earlier in the week, filling in for Blake, who's on vacation with his family at Disney. He'll be back next week in his usual same time slot, and I'll be back to the European crossover webinar, which is an hour before this. We're seeing the dollar stronger, and as my mom used to say, not to sound like a broken record, but I've been saying it for a while, it's all about the ZB. That's my phrase. It's all about the ZB. So if you look at the ZB, you know what's going on. And I posted a chart of the ZB right next to the euro dollar. Euro dollar looked like we had put in a low yesterday, and looked like we were able to work higher and get some shorting opportunities, probably closer to around 11. And you see the euro making a trip back to the 10.07 area, key area. We mentioned that before. We're a little bit higher off of that, but I mean, certainly the euro lost its momentum on the backdrop of the bonds after sitting in a nice little bottom there, have turned around and relinquished those gains, and once we lost 64.24, basically opened the door for the bonds to go lower, much lower than I would have expected. I mean, it looked like we could get a recovery rally, but that's the reason why. Also explains the reason why the the dollar yen has been able to go on and recover to its levels. It's the same thing, like I mentioned two evenings ago. When the bonds had started really rallying, and was the cue to go in and take the dollar yen short. And as mentioned, has nothing to do with the BOJ, has nothing to do with the yen. It's all about the ZB. Yeah, Max, I know what I'm doing. Okay. Alt tab unless you want to keep sharing Reuters. I know what I'm doing, okay? I have my format that I do on the show. Nothing's going to change. We go in and cover the news to go in and cover the theme of the day. You may not realize this, but it's a 2-hour show. So we're about 3 minutes into the show. It's not like I'm not going to get to the charts, okay? It's the same format they're using, and like I said, I'm covering Blake's show, happy to cover all the cross rates, but I've got my own format and the way I do things, the same way Blake covers news in the morning or what's happened overnight, and I always start, nothing's been changing. I've been doing this for well over a year or 2 years, I don't know, and it's been the same thing, or a year and a half. I always start off so that everybody can see the news, then we go into the news stories, anything that's significant, and then we move to the charts. I mean, I could see if I was still on the Reuters thing a half hour later, but we're 3 minutes into the show. So we'll go into the news, and which is actually the story that we have here. Dollar set for weekly gains. Investors await data and Yellen. Dollars on Friday, ticking with Treasury yields. I just said that. Actually, I haven't even read the story. I just saved the data and just posted it here for those in the chat room. The dollar rose on Friday, ticking up with Treasury yields and on track for weekly gains as investors await U.S. retail sales and remarks from Fed officials that would cement or could cement expectations of a U.S. interest rate hike this year. Safe haven yen, the Swiss franc went under pressure after risk sentiment got a boost from China data that showed producer prices rising for the first time in nearly 5 years. That boded well for the global economy, which is battling the threat of deflation in recent months. Retail sales could offer some insight on the strength of U.S. consumption. Following the data, Fed Chair Yellen will address an economic conference at which Boston Fed Governor Eric Rosengren will also speak. Minutes of the latest Fed meeting in September released on Wednesday prompted investors to raise their bets of a Fed rate increase at a December policy meeting. Markets are now pricing around a 70% chance of a Fed move. Markets will be looking for a solid rebound in U.S. consumer spending, with headline retail sales print likely to pick up, says Viraj Patel, currency strategist at ING. With consumption now a key engine for growth, we've noted that the dollar crosses have been more sensitive to surprises in recent U.S. retail sales reports. So any upside in today's release could sustain the dollar's upward momentum. Against the yen, the dollar rose 0.5% to 04.25, having risen to 04.62 yen on Thursday. Remember that's 04.62. That was when I posted the chart actually in the chat room, but I did share it later on in Twitter. Was with the bonds taken out 64.24, and that offered a great selling opportunity. We lost 100 pips in about 18 minutes in the dollar yen. Traders said that with the dollar yen pushing steadily higher, investors who have been building bets in favor of the yen in recent weeks are likely to cut those positions, giving another leg up in the greenback. Positioning is a concern for us, said Morgan Stanley analyst, said in a note. With the markets extremely long the yen currently, it will only take a small rise in dollar yen position to start to adjust. Okay, and sterling bounces after Carney says they're not indifferent to FX. Sterling recovered all of the day's losses against the dollar on Friday after BOE Governor Mark Carney said the bank was not indifferent to the level of the pound, now down almost 20% since Britain voted to leave the EU in June. Carney repeated the bank's traditional line that it did not target a particular exchange rate for the pound, but he added that the level of the pound does matter for inflation and for the conduct of monetary policy. Sterling gained 0.5% to turn flat on the day against the dollar. So we'll go and take a look at the news coming out and what we have coming out for today. We already had Italian inflation, UK construction output. Okay, so we have PPI final demand. That's not going to move anything. It's final demand. But we do have retail sales, which is going to be closely followed. So we'll see how that impacts the dollar. Obviously, good retail sales will send the euro sub 110. And later on at 10 a.m. Eastern, we have the business inventories. And we also have Michigan. Well, this is the sub-indexes. Michigan is preliminary, so that's going to be key here. So we're going to move into the charts now. And you can see here in the euro, we've had a pretty good sell-off despite getting above the bias pivot of 1043. And the euro looked, we talked about this, and yesterday I was hoping to go and get long around, 970, or potentially we could make even a move down here at 963. We only made it to the top of the zone here, which is support, at 984, but I figured we'd be able to come into this zone, and I was, somewhat disappointed that we didn't, at least on a very short-term basis, take another dip down here for test, and then that would give me the opportunity to get long, and the market basically stopped dead in its tracks once we got there to the 984 area, and turn around and began to rally. And it took a little while. I mean, we actually rallied rather quickly, then we just sat there, had a couple of medium-legged dojis here. The market wasn't sure what it wanted to do, and as we start to move higher, everything looked okay. Only thing is that later on in the afternoon, we were seeing the ZB already starting to lose some of its muster. and that was the concern. And let's see. So we're going to move into the euro on a very shorter term basis. So we had got the buy signal earlier in the session, very early in the session, and it maintained that buy signal. But if you look at the euro here, and this is on a 15-minute chart. I look at it on a 15-minute chart, although I use the 30-minute EMAs. Let's go on and take a look now at the bonds. And you can see how here in the bonds, the picture is quite similar. Well, it's really the euro following the bonds, okay? And as the bond prices improved, which would provide lower yields, which would be I wouldn't say detrimental, is probably not the correct word, but would be negative towards the dollar, you saw the euro rally. So if you look at this, it's basically, to a certain extent, the same setup that you saw here in the euro. So as the bonds managed to lose the 64.24, and we turn from a very nice short-term bottom, expecting a recovery rally, that would take us a little bit further, we kept on losing that. And as we lost that, that created a sell-off in the euro. So you can see the same setup. You see here, the only difference was in the bonds it pushed up a little bit higher up in here, but it's the same setup. So it's the euro that's been following the bonds, because as as bond futures go lower, interest rates are going higher, and right now that's been the theme now. Now everybody's focused now towards U.S. rates going higher. After everybody was, all of y'all were taking your pot shots at Yellen and the Fed, and they have no credibility, and blah, 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 blah. I tell you, all the other central banks are the ones that don't have any credibility. So now the focus has been, now it's all about the Fed raising rates. So you can see how the dynamics or the theme of the market now changes. Instead of the cup being half full, now the cup's or the glass is half full. Now the glass is half empty. Where negatives are accentuated in the majors, once again, versus the dollar, in the sense that anything that points towards a little bit of strength is going to weigh very, very heavily, in this case, on the euro. And so as the bonds sold off, the euro was quick to go on and follow in turn, basically follow the same course of action, except this on a 15-minute, the other was on a 30-minute chart. Let me go back to that chart. I want to show something here. I'll make one last mention on this, because some dude was giving me a hard time about all my levels. Here's the deal, dude. I'm a day trader, primarily a scalper. The markets, I go by the market trading by level to level. I'm not trading off hourly charts looking for 3, 5, and 9, 10-day moves. Okay, so we've seen the significance of 1007, and I had mentioned that before. And 1007.05 area back in July was where when the market was sub 10, it kept bumping up against and having a hard time. So we emphasized the importance of this 1007. Where does the market go to? Boom, 1007. So as a day trader or short-term trader, I'm looking at the market as it moves from level to level. So you can see the significance of this 1007. So look where the market, after this sell-off, finally goes and stops. Right here at the 1007, we rally back. And we talked about this yesterday when the market was already moving high, and I go, you know, maybe it may move back to 1007 at this point. Hard to say now. Maybe may not make it back there, which is what we were yesterday. This is the same time yesterday. I said, you know, maybe may not be able to make it. Obviously, you know, this 1007 is important. Well, the market comes up here. Actually, everything looked like blue skies ahead for us to at least come up here to this 1105. But as the market chooses to sell off, where does it go to? 1007. Thus on my levels, and I'll say it for the last time. You know what? You trade the way you want, and I'll trade the way I want. Don't worry about what's on my charts. Worry about what's on your charts. So let me go on and it wasn't anybody here in the room, so I don't want anybody to think the wrong thing. It's just that, you know, you'll hear me sometimes badmouth Peter Schiff because of all the crap he said, but I never go on and call out or make fun of a trader. That's just not my style. Everybody has their own way of stuff. I like to joke around with the same, you know, just as much as the next guy. But certain things I don't like to joke around a lot about. I don't, and I'll never deride, even in a humoristic way. I won't deride another trader. You know what I mean? And plus, anyway, like I said, you know, my style of trade is very short-term oriented. Lots of times only scalping. So that's what I'm saying. That's why you're going to see a lot of levels, because I see the market move from level to level or zone to zone. And why sometimes you'll see me where I practically catch a bottom pip or very, very close to it. It's not that I'm so great or anything like that, or I've got this great analysis. It's just that my stuff is more focused short term, which is the same reason, like I've said all along. I'm never going to be the guy that catches 200 pips in the euro. That's not my style. That's not my game. But anyway, getting back to this, so where do we go from here? Like I said, I was having this discussion a couple of days ago or a couple of months ago, and someone you had mentioned something. I was responding back to their tweet and saying, hey, look, I think, you know, we got to go sub 10 because we were holding above 10. Got to go sub 10. We've got a nice zone in here between 963 to 984. And I think that that's where they'll go to. The July FOMC low was 962, blah, blah, blah. Well, right now, as we come into a Friday, this is a bit of a concern, and that's why I would urge y'all to be cautious, because you know how FX is. We saw the same thing last week. Last Friday, put us back over here. You see here, this run up here? We saw the euro coming back off of the NFP, remember? And then as the market, it just starts squeezing later in the day. And I was talking to some people in the chat room, and I got to a level that I liked. I think it was, honestly, I don't remember what it was. We were talking about 1093, but I think it was a little bit higher. I don't remember what I've had. It might have been that 1093, this is where I short or whatever. It doesn't matter. And I think at the time I was trading the 60. But the point was, it ended up actually going higher to the area that I should have waited to start with, but I added it, that area. And I was telling them, hey, look, this is the way the market trades on Friday in FX. If they have the, you know, the market will, if they figure they got you on the wrong side of the tracks, they're going to squeeze even harder. There's a lot of reasons why you see that in FX. I mean, one of the reasons Blake has explained to is you have a lot of small traders in FX, a lot. So the market, if it knows it's got people's feet to the fire, they're not going to let them off the hook. They're just going to go on in and press it even more so. Okay, so we were seeing this as moving higher, and they were saying, hey, look, it's moving higher. And I go, hey, look, that's what happens on a Friday. You know what I mean? It just happens. I mean, so I added as it went even higher. Then it kind of surprised me that it even pushed even higher, but it did. And then here comes the Sunday session. They open a little bit weaker, and then the rest is history. Now, I didn't expect the wheels to fall off the caboose like they did. What I'm saying is That's just what they do. So right now the move overall and the show is focused more towards day trading. And on Fridays, we do a tutorial type thing where we kind of focus on, I don't tell you how to set up day trades, but we'll focus on like what we see something playing out. Basically from a tutorial standpoint, I'm going to wrap it up real quick because I'm sticking with the same break times that Blake does, okay? But we've had a pretty big down move. So anyone that was shaken out as far as bulls, I think they've already been shaken out. So now we're weakening again and we see the bonds fairly weak. I kind of, my whole thing about the euro being able to defend this area was based on, hey, look, the bonds have already fallen a big chunk of change. I think it's a little bit overdone. Well, now we've seen the bonds lose what was a very short-term buy signal, okay? So below the support in the bonds is 63.16 and 63.03. So if we come down here, I'm not saying that it can't hold a little bit, but I tell you what, I don't want to be buying this thing on a Friday and looking for it to hold. I don't. So if we get a good retail sale, yeah, we're going to come down here to that 963. Can we pop back up a little bit? Probably still on a little bit of short covering. Do I think it's overdone? Yeah, I think it's overdone the short haul. But I don't know about this. I really don't know. If we get a good retail sales and then we get and I'm just telling you what the theme will be, or I believe the theme will be, we get a good retail sales. Then we get a very complimentary University of Michigan, and then we get Yellen. She's not going to be hawkish, but basically them saying, hey, look, that's where it looks like it's going, barring some unbelievable circumstance, we're going to keep on raising. The market, as I said, is already looking at the glass that's half empty. No more glass is half full. We had that for the last few months, or for the last 2 months. Remember this range? You remember it really well. I do remember it here in September really well. The glass was half full. No matter how bad the news was, boom, bid, boom, bid, boom, bid, boom, bid, boom, bid, boom, bid. That's what it's been. The glass is half bid, half full. But now that we talked about this, as we've broken out of this range, now, put it back, I think I moved that level here. Now the glass is half empty. Now, any kind of bad news is being accentuated. You see that? Any kind of bad news, sell that euro, sell that dog, the euro. And I'm just using that as an example. What I'm saying is, now, what happened? What happened to all these fantastic bids? Boom, boom. I mean, the world's coming to an end. Okay, rally the euro. The ECB, Mario Draghi just got found with his pants down. Okay, rally the euro. Whatever, the Eurozone is going to fall apart. It's almost 100% certainty. Okay, rally the euro. I'm saying no matter what the news was, it didn't matter how negative it was, rally the euro. I mean, I remember here, I did that blog post. This was, and I repeat that blog post. What I was saying is, I remember back here, it wasn't that soon, but it was like right around here. Morgan Stanley, the market was traded at 1270. They didn't even give an entry. They just said, buy market, target 116. But now the glass is half empty. That's what I'm saying. So all I'm saying is be careful. I liked this area, which was the 963 to 984. But I tell you what, coming into a Friday, and if we get good retail sales, and I think, and then good or complimentary University of Michigan, and they got Yellen and Rosen, what's his name, speaking. I tell you what, this thing could slide, and then it's going to get a little bit ugly. So it's the same thing with the bonds I told you all about when I wanted to buy the bonds. What was it, 3 or 4 days ago, 63.16, and I was telling y'all, I go, maybe it was on NFP, and I said, I don't want this dog down. I go, so that's what I'm saying is, I'm not going to be sitting over here. I would not be shorted at this point. It comes down here, you might see a little bit of bounce, but I tell you what, you're probably going to see a still continued pressure. I don't think it's the kind of pressure that you see normally on a Friday, but it's just going to add to further downside action. So I think you have to be careful on this. And anybody that went long, and I didn't go long, I'll tell you what, nothing's helped me more than just being plain old patient And I wanted to be a buyer down here at 963. Or I would have had no problem chasing the market if it had gotten into the low 970s. But we just didn't get that extra little dip down here. And it's time for a break already. But I'll go in and go here into the 15-minute chart and tell you what I'm talking about. And I showed it yesterday. We'll go into that. I thought we'd at least make one more drop here. You see, because we already traded into this range in here. So I did not expect just a little dip because we were trading above 110. You see this whole time. We couldn't take it at 110. So we can drop here and then take one more dip. Not even that much. Just can be like 10, maybe 18 pips, maybe 20. Then we could go higher. And I even thought we might be able to go here because the July FOMC low is 962. So you take that out and then we can go blue skies ahead. So the idea that we couldn't even come down into the 70s as a little retest, I was like, well, I missed my opportunity. And that's what I was even telling you. I go, we may come down to 1007, but it's on a buy signal right now. And you can see it just maintained that momentum. But as the bonds started to lose their price, that's what is weighing on the euro. My concern is, and they said it best in that story I told you about, where they're saying this may cement the thought that the Fed's going to raise. If that's the case, then it's just, I already said that I expect the euro to go to 107 by December. I've stuck to my guns a month ago, and I've stuck to my guns over the last 10 days. And I still stick to that. I think it's well overdone here in the euro. I do. It doesn't mean that they're not going to go and move it down to here. 925. And then we try and work higher. So all I'm just saying is be very cautious on a Friday. So it's already time for a break.